Hi, everyone. This is Will, aka Dr. Financial Literacy. Hope you're having a great day today. As noted earlier, I was successful in getting a home equity line of credit. So that will start in May. Up until that point, going back and reading the HELOC and everything that came with it. I initially had some disclosures, read through them in general, but these are the actual documents that I signed, about 150 plus pages on them. And as I go along and find some things, I'm gonna start dropping them inside of the video into the various playlists. So this is just something that I started looking at in May. What is the potential and what is it going to look like? So when starting as usual, my salary for the month will be $3,390. My expenses that will now include the HELOC at $424 in interest is now also going to be inside of the new expenses. As you can see, it dropped slightly. So previously, my expenses were about $3,000, but with the HELOC, I was able to consolidate some of that debt, and my expenses came down slightly, and the cash flow increased. However, I also looked at my insurance, and for my Kia, where I was paying about $40 a month, is now jumped up to 105 a month. I asked the insurance person what was responsible for behind the jump, and they indicated that some information about the Kia 15 was placed on the internet of how to steal it. So that increased my cost. So I'm gonna go back and look on the internet to see what I find out about it. But according to the agent, someone put something on the internet how to steal a 2015, I think Kia Forte or Kias in general, and my insurance increased by about 100%. So with that, my cash flow is slightly up. With the home equity line of credit, let me get in the picture a little bit more. Sorry about that. With the home equity line of credit, I'll be starting off with a balance of 50,500. Now, that case, some velocity banking advocates don't start that high, but with this particular company, the minimum draw to get a HELOC was $50,000, and then they added some things because of my debt, the income ratio, to get me under. But in general, for this particular company, it was a $50,000 initial draw. Some of the other companies that I tried to get had $100,000 as initial draw. And initial draw means how much money you would initially take out from the line of credit. So with that in mind, my balance on a HELOC starts off at 50,500. My income is going in and it's subtracting down in terms of trying to do the velocity banking. That'll give me a balance of 4710. Then I add into that my expenses. My expenses are 2467. Now this 2467 is lower than the 2891 because when I drop in my income, it satisfies the payment of $424, as other velocity banking advocates point out. When you put your money in, it's satisfying the payment. And this is similar to the credit card. When I put my income into the credit card, it satisfies the payment. And that's what I did earlier to successfully get to the HELOC. I cleaned up my credit, moved some things around to get to this point. Now, after that, you have interest for the month. Now, my interest for the month was $431. I got that by multiplying the interest rate of 10.25 times 50. So what I'm doing is going back to the very beginning of each one of my balances to multiply the interest, to multiply to get an interest rate. So for each one of these areas, I'm going to be multiplying the new balance by 10.25 to get an interest rate in each one of the categories. So 10.25 times 50,500 gives you approximately $431 for interest. Then that gives me a balance of 5008. So I take that balance over to my next row. And once again, I'm putting in my income. So acting as a checking account, your HELOC, my HELOC will be acting like a checking account. I'll be running the majority of my bills and try to get just as much as my bills in general. This should turn into my checking account. That'll be the next phase starting in May. I should really start looking at the HELOC as my new checking account and putting things in. Now, one drawback to that may be when I try to initially get a line of credit or when I try to get a home, the banks will want to look into a checking account to see where your money is going. So I got to kind of figure out a system to see what's going on when I try to get additional credit. If I do get additional credit, what checking account will they look into, or what would be the consequences of not having money flow through the checking account? So I need to look at that. So next, it goes back up to 50,008. That's the balance from here. Same in my check. Next, I'm putting in my expenses, and next, just calculate the interest rate on that amount of $50,000. Same, once I have that calculation, I'm just moving over to the next month, and then these months should be May, June, July, and August. Today's case study is 4/13/24. I'm going to go ahead and subtract that, move that out of the way. But I am the case study of today. This is going to be August. So these are just some projections again that I'm looking at doing in terms of looking at the velocity banking and using the HELOC. Now that I have it, got to learn better ways of using it. So this is for May, June, July, August. My numbers are coming from an Excel sheet that I encourage you to try to put together a budget. You should know 3 basic numbers: your income, your expenses, and your cash flow of what you have left over. So this is a projection that I have for the next 4 months and trying to use my home equity line of credit. It's a revolving credit similar to a credit card. One of the other things that I want to point out that I learned in terms of with this, the company that I'm with, is that there's 3 periods to the HELOC. Now, with some other individuals, you hear a draw period and a repayment period. For this particular company that I'm with, there's 3 phases of the HELOC. Those three phases are: 1, I'm gonna have a draw period of 1 to 3 years. That draw period will be followed by a holding period, what they call. Period. Then there's going to be a holding period on the HELOC, and that is going to last from 4 to about 9 years. And then the last period, according to my contract will be the repayment period. And that period is going to be interest and principal. And that is going to run about 20 years. So when I first started the process, I heard of a draw period and just a repayment period. But for the company that I'm with, and based on my contract for this loan or this HELOC, is 3 periods. The draw period, I'll be able, like a credit card, to go in and to go out. However, in the next 7 years will be a holding period where I can't make withdrawals or I'm not able to make withdrawals, and I can start only paying the interest. Then that last period will be 20 years of paying the principal and the interest. That payment can reach upwards of $700 a month, if not more. So definitely that was a surprise. Again, I thought it was 2 basic periods because I heard a lot of other YouTubers, content creators, and read in articles where there's two periods for my lending. It's about 3 for the draw. So I got to really work hard the first 36 months to really make sure that my entire paycheck goes in. I'm really using it as a checking account. I'm paying all my bills out of it in general, gas, clothing, traveling. This will become my new checking account. However, I feel, as I said earlier, I need to be a little cautious of that and find out more, because if I try to borrow more money like I did before, they asked for a checking account and they looked into the checking account to kind of see the deposit. So I need to find out more information about that in general. Again, this is a home equity line of credit. I was able to successfully secure it. It paid off one of 3 of my mortgages, and a mortgage that it paid off was one for about 35,700. I initially got that mortgage in 2008 or 2009. I've been carrying it for 15 years. It started off initially at I think $41,000. So when they talk about fixed rate mortgages, this is an example of where they front loaded all of their interest in the loan, and then I was paying it down until I can really get to the principal part of the loan, which was initially $41,000 in general. But that is where I'm at now, just reading through the contract, looking at the devil in the details. I am still blessed that I was able to secure this loan. For many of you who've been with me, I really tried hard in December and January, and I was not successful. I paid down some of my credit cards using the Velocity banking. I came off as authorized users on some other accounts. I improved my credit score in general. I was sitting around one night just deleting the emails from the companies that I was not successful with. And the spirit just told me, I just heard a voice say, hey, go back to this particular one. I went back to it when I was deleting it, gave them a call just to see what was going on. I talked to one of the persons on the phone and felt a little bit more comfortable. And I just went in and said, okay, do a hard pull. And it came back that, okay, I've been pre-approved, but I still had to go through the process. So that helped me to be pre-approved after the soft pull. Then I decided to go back again after the hard pull. So again, in general, Velocity banking, as I ran some of the experiments against it, it did well in terms of paying down my previous mortgage. What I was doing was contributing maybe $100 extra to bring down the principal. But with the velocity banking, it seems like it's giving me a little bit extra without making any additional changes. The main thing that's happening is that I'm now no longer letting my money just sit in the bank. I'm putting it on a particular line of credit, and it's acting as a payment, which is adding additional cash flow. If you'd like to learn more, me and my team would love to work with you in general. You can reach me at the phone number below, at the email below, and love to work with you to help you pay down some of your debt and learn how to use velocity banking to help your community and to help yourself and your family. All right. Thank you very much for joining me again today. Have a great day.